Welcome to the STARS program, seniors taking active roles in society. And now, here's your host, Anita Finley.
I'm very proud to present Rob Colson, the founding member of the US Insurance Auditors, LLC in Boca Raton. He's been on our show, and he really is helping people, and he's helping people in a confusing business. I'm always confused about life insurance, and once you talk to him, though, it does help to be less confused because he kind of takes you by your hand and says, okay, let's go over this carefully, and I'll tell you what we can do for you. So thanks for coming, Rob, to the show.
Thank you again for having me, Anita. It's always a pleasure.
Yeah, and of course, life insurance is really confusing. Any kind of life insurance.
It is very confusing. I'll admit it. I've been in this business 25 plus years, and even for people in the business, it's very confusing. There's so many different types of products today that are available. Everything from temporary, short-term, long-term, permanent, business succession planning, insurance policies, key man insurance policies. It's very hard to diagnose for many people. Many people do not even remember or realize what they purchased years ago. So really what our job is to make a confusing market simple, and I think we do that because basically we're the resource where we can access all the major carriers in the United States. A-rated carriers are better. And what we do is we access those carriers to see if there's a better fit, a new fit, some new features that you may want to access or need to access. We've talked about it on previous shows. One of the most popular bells and whistles today are these long-term care accelerated riders on life insurance policies. And many people are not even familiar with what those are, but statistics today are telling us 72% of us worldwide are going to end up needing some type of assisted living or nursing home care. And unfortunately, less than 30% of us have a long-term care product. So there's 3/4 of the country going to end up, you and me, everyone, Anita, in one of these nursing homes. Less than 1/3 of us have coverage.
And that's not the way it was supposed to be. I mean, I think people just thought that they were going to, well, I know the real problem. When the insurance companies started all this, they never knew people were going to live to be 100 plus, and they didn't figure it out that way, right?
That's the majority, and that's the biggest point to be noted. You do many. You have your own shows, your synopsis, all these shows and fairs you do, and it's simple. You bring in these doctors, you bring in these hospitals. There's new treatments, there's new medications. The average person's living 10, 12, 14 years longer than they were 20 years ago. So when people were planning years ago, they were estimating your average male would live to 78, 80, your average female would live to her mid-80s. Those tables are completely off now. And what's happened is the insurance companies had priced those mortality tables based on what they thought. They weren't putting those numbers out there so that, A, they could lose money, B, that their clients would get these what we call accelerated bills that we've actually talked about last month in the show. And what is that? What are accelerated bills? What's happened, very simply, is the cost of insurance over the cost of years has come down price-wise. But what's also come down is interest rates. So these insurance policies that were specifically purchased in the 80s and 90s and early 2000s, those were priced with internal growth rates that are 2 and 3 times what they are today. So what does that mean? When you give an insurance company your premiums, the insurance company invests a portion of that money so they can offset the potential pool of people who might pass away in that given year for a John Hancock, a Prudential, a MetLife. So they calculated that based on interest rates. Well, the interest rates back in the 80s, 90s, early 2000s were anywhere from 7.5% to 16-17%. So the insurance companies could find easy, fixed, AAA rated investments to offset that growth, to offset with the mortality of their book of business. Well, now they're working on 3.5%. So what's happened is what they projected a person who, say, was 50 years old 20 years ago to pay for a $250,000 life insurance policy, that guesstimate's now off because the insurance company no longer has 7, 10, 12% to grow that money internally. They have 3.5%. So the cost of the insurance is now often more than the growth rate. So what does that mean? That means that without adding more premium than was projected when you started with this policy, if you don't continue to increase those premiums many times 200 to 400% per year, that policy will lapse.
I am just flabbergasted. So that's why I'm so happy that you're talking to everybody and you're teaching people what can you do. So someone calls and they have that situation. What do you do? Tell them just to get rid of their policy?
Absolutely not. That's the last thing we would tell somebody. What we do is we do a discovery. We do an analysis of that client's situation. And what is that? It's very unintrusive. We can do it quickly and simply many times over the phone by just asking a few brief questions. What's your current health status? Has anything changed since you purchased this policy? And what are those changes? Those can be all the majors, not the little things as you get older that you're on a thyroid medication as a woman and men who have a little bit of high blood pressure here and there. Those are not major issues. Major issues are the big four: stroke, heart attack, cancer, renal failure. Even diabetes, we can write around many, many times today, especially type 2 diabetes. So many people think, you know what? I went to the doctor. My cholesterol was 240. I'm 5'8". I weigh 230 pounds. There's no way I can do better than this policy. That's why the insurance company raised my bill from $5,000 a year to $10,000 a year. It's because of this.
It isn't, though.
It absolutely is not. It is due to the cost of insurance increasing and the interest rates going lower. And so many, many people are sitting back today going, what do we do? I really can't afford to pay $10,000, $12,000 a year for a $200,000 policy. And here's the quandary. Here's the problem. These people have already paid that $5,000 into that policy for 20 years.
A lot of money.
It's a lot of money. So they're looking at this as to many people that they've lost their investment. They've lost their $100,000 and there's nothing they can do. But that is absolutely incorrect. We're not here telling people we should replace, cancel, lapse, anything with their current policy. As a matter of fact, if they are in a good policy, and we can tell by looking and shopping rates very quickly for them, we can tell them whether the rate is good, bad, or indifferent. And if you're one of those 5 or 10% of the population, and I say 5 or 10% because that is how small the basket is, who have the best rates in the market, who have a policy that would be unreplaceable in any situation, we're going to tell you that. We're going to tell you, Anita, you had a great agent. That policy is excellent. That carrier is still fantastic. And I would not make any changes to that policy whatsoever. But more importantly, we could look at that policy and maybe advise you to do different things to that same policy. Maybe that carrier is offered a different type of option that you could transfer to within that company. And what are those options? There's plenty of them. There's the accelerated death benefit options. There's waiver of premium options. There's nursing home care riders.
That's the one I think people really should be interested in. Go ahead, one more.
Yeah, and then the long-term care situation. So very simply, you could put yourself into a similar type policy. If your health has remained relatively stable over the course of the time when you initiated the policy, you more than likely could get into something that could help you in many more facets other than just a death benefit.
So why do the insurance companies even bother to do that? Because they're afraid people. I mean, is it to their benefit to keep? They want to keep people in it. That's why, right? And they give them. They know that they probably can't keep affording it the way it is, and that they're offering other things.
It is, and it's actually become almost nationwide legislation now that the government, the Department of Insurance in each state, has forced the insurers' hands, because what they have looked at, and this is a stat that will absolutely floor most people. There's over $30 billion a year of life insurance that goes without ever paying a death benefit, either lapses or surrenders or given back to the insurance company.
Amazing.
So there's $30 billion, and I'm not sitting here and telling the audience here that there's $30 billion of policies that could be 100% certain, that with certainty that something could be done with those policies. But there's a huge portion of that market that those people could have, A, probably gotten 2 to 3 times the cash surrender value that the insurance company would have got, And we've talked about that on previous shows. Those are called life settlements. That's another service that most people, especially when they're in the position they no longer want, need, or more importantly, cannot afford the policy anymore. So run back to that same scenario. That same person who's been paying that insurance company 20 years, $5,000 a year, $100,000 out of their pocket. Now they're in their 70s and they can't afford $12,000 premiums. Those people 9 times out of 10 call the carrier. I can't afford it. Carrier says, okay, your option is to surrender the policy. More than likely, that's a very small cash balance, and they're more than happy to mail that out to the client. Getting back to what the states have instituted now, the states have instituted, in many states, Florida is one of them, that the carriers have an obligation to the client to discuss a life settlement with them and tell them to explore that market when they call to surrender now.
Is that right? So, well, that's good news. And, of course, I think they should call you first, and that's what I want to tell everybody. I think if you to just listen to what Rob's saying, you'll hear a man who really is very smart, but you might even hear the compassion he has. He is a very special human being. And when I guess people have said, well, people who sell insurance, they're not so special. Well, yes, they are if you find the right one, and Rob Colson is the right one. You have to call him at 1-800-218-5033. Although he is located here in South Florida, in Fort Lauderdale, he's certainly, I guess it's Pompano, really, isn't it?
It's Boca.
It's
Fort
Boca,
Glade
sorry.
Road and Federal
Why
Highway.
is it 954? That's your cell phone.
No, that's another business
That's
extension.
another business with 944. Okay,
Yep.
954. All right. Well, let me give you the toll-free number because that will certainly get him. 1-800-218-5033. 1-800-218-5033. Just call there and ask him to just either come by, or you can go by where he is and find out just what you do have, because you probably don't know what you have. So go ahead and continue, Rob, but I just want people to be able to get in touch with you.
That's really the most important thing, Anita, because the hardest thing to do is pick up the phone and do something. We have a very seamless process. It's very easy. And again, our process is simple. We can ask a few easy questions up front and probably tell you 9 times out of 10, without having you to drive over to the office, send us your whole life story, and undo your mortgage documents. We can help you talk about what you currently have, make a recommendation, and again, if it's what you have is currently the best thing in the market, we will tell you that. But what people don't realize is what they have is options. There's a lot of options today. And the majority of people and the insurance companies win 9 out of 10 times. Universal life policies pay less than 80% death benefit, and terms pay less than 90%. So what that means is less than 10% of people with term policies ever see a death benefit. Less than 20% of people with universal life policies ever receive the death benefit. And that's a shame because, as you know, you've had many yourself, people pay into these policies for many, many years. They should look at those policies as an asset, just like their stock, bond, and mutual fund accounts. And the fact of the matter is that they're not is really a disservice to themselves and their estates. And why is that? Because many times, and we're talking in larger cases now, higher net worth estates, $1 million to $5 million estates, those people could literally save tens of thousands of dollars on the cost of their insurance for many, many years, 10, 20 years going forward. And there's many cases we've written within the last 6-8 months where the estates will save over $1.8-2 million.
Well, I have to give a testimonial on this because I have a couple of insurance policies, but I talked with Rob about this, and he said, well, just send them to me, and I'll tell you what we can do with you. And that's all it required is he gave me a phone number for the life insurance companies, and I called them, and they gave us we called that not a registration. It was did you ask me to get from them? Illustration. And sure enough, I brought it to Rob, and he looked at it, and immediately he told me what the value is, what I can do, and how he could help me, or whatever. Now, of course, we had borrowed some on it, and other people, I guess, have done that. But and he gave me some other choices. But we have done lots of things with our insurance policies because I always did think of them as assets. And the one very large one that my husband had, of course, we did a life settlement, and it really turned out very well. I wish you had done that with us, but that was way before I knew you. But I know a lot of people are out there, and there are a lot of people who listen here to our shows that have a lot of money, and I guess no one has really guided them on this. They just have that policy. Most of them are keeping it in their safety deposit box, and they know that they probably don't even need this anymore, because their kids are gone and maybe they're alone. What happens to that money? I guess it goes to the estate if there's anyone even left. He or she could be taking that money and doing stuff. They could take the money and now give it to charitable organizations. Wouldn't that be nice? And still have some to protect them, right? There's a lot of things they can do.
We do. You actually brought up another part of our business that we do as well. And we do that with high net worth people. And if they have what's called insurance capacity, meaning they have the ability with their net worth to purchase an insurance policy, but they no longer need it for estate tax purposes to offset IRS estate taxes that they may have to pay. So if they have that capacity left and they want to gift money to their favorite church, hospital, any place, humane society, any philanthropic choice of theirs, we can help them do that without putting up any money out of their own pocket. And it's done through what's called premium financing. And it's basically a collateralized loan from a bank based on that person's insurability, whereby when that person passes away, whatever amount of the capacity they had, 1 million, 2 million, 5 million, will be passed on to their church, their temple, the university of their choice. And all of that's done based on their net worth, their insurance capacity, their health, of course. And for the donor, for the insured, they never have to pay a dollar out of their own pocket for that because the bank collateralizes the policy and premiums with that insurance policy.
And there are no taxes that they have to pay.
There's no taxes they have to pay, correct.
Well, that's a wonderful thing. So everybody, do me a favor. Go into your safety deposit boxes, go into your file drawers, go into under your mattress, wherever you have your life insurance policy. And if you don't know where your life insurance policy is, and I'm sure that happens to people too, you can call Rob Colson at this number, 1-800-218-5033, and he will help you figure out where it is.
That's exactly right.
Have you ever found someone like that? They don't even know where it is?
You know for sure. Here's what happens. The very first thing happens when somebody gets sick, goes in the hospital, people are scrambling for these policies. Many times they're lost. They have to be replaced. And I can practically tell you that probably 8 out of 9, 10 people would come to you and say, Anita, I know I bought it. It's somewhere. I have to call my accountant. It's probably in the safety deposit box. It's probably in a file at the house. And that's what people do with it. One thing I also want to bring up is we're always talking about our company and what we do in appraisal and life settlements and all that. I also want to let everyone else know that we're also a major brokerage house where we sell and broker all of the major carriers in the country.
What does that mean? What does that mean?
That means we have access to every carrier from the A's to the Z's. So we're not partial to a John Hancock, a MetLife, a Prudential, an American Equity. We basically shop them against each other. So it's just like when you go into a search engine, you're looking for an airplane flight, car insurance today. You can go through and shop all of these people at once. We do the same thing with life insurance, with disability products, with long-term care products, with annuities. So when somebody comes to us and they have X amount to invest in, say, an annuity, every company, insurance company, has a different bonus structure, a different income rider, and a bell and whistle. So what it allows us to do is meet with the client, shop all of the available carriers in the market, and know when we deliver that proposal to the client that we know that they're going to get the highest rate today based on the market today. Not the best market today from Prudential or MetLife, the best from all of them because we bid them all against each other. So
okay, that's great because, see, people can't possibly do this. I mean, you have an assurance salesman call and probably he's with one particular place, and you bring up a very good point. But now when you do that with someone and they buy the policy from you and you take good care of them, Will this have to increase also? Are they going to be having higher payments next year and the year after that?
Now backtrack
on insurance policy?
No. Generally speaking, we're at historical lows in interest rates, right? The federal funds rate's almost at zero. The Fed hasn't raised rates in a year and a half. We're at historical lows. There is nowhere to go but up at this point. So there's two ways to answer that question. One is today we're also have a new product which is called a GUL, which is a guaranteed universal life policy. Now, many people don't know that unless you're an estate planning attorney or you're a very good estate planner, period. What those policies are is that those rates are guaranteed till both of those, husband, spouse, or on an individual policy, pass away. So on a GUL, there are no mysteries 5-10 years down the road for your kids, whoever is the trustee on that estate. So those are the different types of products, and that's why you need a professional to help you choose those products.
Do you like that?
There cost a little bit more, of course, because of the nature of the product, and for each person it's different. So yes, on a person who has a large estate and they don't want any surprises for their kids, their trustees, whoever runs that estate for them, then we would use a GUL product.
This is a crazy question to ask you, but do you go to seminars, or how do you know all this? You're so smart. How do you you can't possibly read this every single day. What do you do?
Because I was trained from in the early 90s when I started in the business. I was a broker from Payne Weber, New York City, and I was trained in downtown New York, and that's where all the training comes from.
And then now to keep up, how do you keep up with all this?
We have ongoing CE licensure seminars. It's a constant ongoing learning basis, this business is. It changes daily, definitely.
But you seem so enthusiastic. You have all these years, you still really like this, don't you?
It is, because it's a really riskless business, and it's a product that we can guarantee 100%. And I was a securities broker for 20 years. It's the exact antithesis of that business, because what we sell today could be horrible tomorrow. Whatever's good today will be bad tomorrow, and that's the way the business always was. And the markets are up, down, sideways, crazy. The only thing you guaranteed in life to get paid on is a death benefit from a life insurance company.
If you can find the policy, I'm kidding. Okay, but I hope everybody has gotten your October issue. If so, you can go to page 12 and see what Rob Colson looks like. You can read his article, How Much is Your Universal Life Policy Worth? You can see his advertising. And, of course, he will be on YouTube, as he's been. We have a lot of his YouTubes. You go to Boomer Times Presents, and then you put in his name, Rob Colson. You'll be able to catch it right away. But I want to just go back. I was being a little facetious there, but let's say somebody dies. And how do they even find out if there is a life insurance policy? Let's say there's nobody there to help. Someone dies. How do people find out there's a life insurance policy, and who does that?
That's the hard part. The insurance companies only have information on the beneficiaries or a trustee. So if it's a trust-based account, a trust-based policy, they have a trustee, right? If it's an individual policy with no trust, you have beneficiaries, normally the kids, normally wife, spouse, kids. If those people aren't readily available, of course, the insurance company does their best to find somebody. But many, many times, those things sit around for a long, long time. And I don't know if you read the Wall Street Journal or the New York Times, but people have gotten death benefits 5, 10, 15 years after people have passed away.
And so if someone dies, there's a registration, I guess, in the state that they die, and then someone from the insurance company looks at all those. They have somebody that does that?
Oh, yes. There's a registrar in there, and their job is to find the beneficiaries. But again, a lot of people live out in the suburbs and stuff, and people change names through marriage, and it's very, very difficult for people to find people sometimes, especially on the smaller stuff. When years ago, many, many years ago, especially with whole life policies, they wrote a lot of them on kids. So parents bought them on the kids. Kids didn't even know they had these policies. And a lot of them are small, $20,000, $30,000, $40,000, $50,000 policies. But a lot of those policies are paid up because of the nature of the whole life policy. So it's been a very long time for these insurance companies to find these beneficiaries. because there's like every other business in this country, they're overworked, and they're not going to chase people around all day for a smaller policy. But the reality is, it's up to you to find out. So that's why you need to have those. If you're an owner of those policies, you need to talk to your kids about it. You need to talk to your spouse about it. You need to let them know. Most people should have a file in their house. We call it a red file, that they know if something happens to anybody in that house, your kids, your husband, your friend should be able to know in your home there's that red file. So that you need it. Every person should have that file.
I think your next article should be a red file. I love this. I have never heard this before. Okay.
Absolutely.
Okay. So, this is a fabulous thing, Rob. So, in other words, everybody should have the red file, and should it have, besides your insurance policy, should have your bank account?
Everything.
That's going to be a huge red file.
You're right. Should have your stock information, should have your person contact. So, so your kids, God forbid something happens to both of you. You want to put this on your family to go run through your house and find all your receipts?
We all do that.
Absolutely.
Bill's mother, we were trying to support her for years, and I guess she wanted to leave an inheritance because she didn't have very much money. So all the money we gave her, she put in a bank accounts, a few of them. We did not know that. And when she passed away, we went through it. We're starting to see receipts from things. She had over $50,000. Here's my mother-in-law, who we felt so sorry. We'd send her, $100 here. And she had this bank account that was for Bill.
Yeah,
so it's just exactly what you
right.
said.
That is exactly right.
She never told us.
That's right. So you got to have the red file.
You have to have Rob Colson, not the Rob Colson in the red file. We're going to see R&R. That was great. You missed something here. Duff is our operations manager, and you probably don't have a red file in your house, and you don't even know what that is. And you have to read his article next month. Okay. Rob, that was really great. I guess we've run out of time, but I hope that people learn as much from your radio show as I do. And I'm becoming quite an expert. In fact, there's so many things I think about, and I'm always telling people now when I discuss things with them, I'll say, do you have insurance policy? If you don't know what you're doing, I've got somebody you ought to call. But thanks, Rob, for doing all this.
Oh, it's a pleasure. Thank you for having me again, Anita.